Hello, everyone, and welcome back to our new episode of Fintech Garden Podcast. I'm Dumitru, Condrea, CEO and co-founder for Novafin, and my co-host, Igor Tomych. Hello, Igor.
Hello, Dima. How are you?
I'm good. All good. Today is the day when we decided to discuss about very interesting topic, a topic that not so many people are raising today, but it'll be quite a mass discussion on this topic in the next 2-3 years. It's about CBDC and how CBDC will reshape the market, will change our lives as business, as retails, as individuals even. Before jumping in big discussions with different players in the market, we decided that it's time for you to think about this now. We decided to, make an overview about this, to disseminate what means CBDC, what's stablecoin, what's the difference between them, what kind of regulations we have, and so on and so forth. My first question is to you, Igor. How we, or me, or you, wherever, we can own 100 euro as an example?
That's a question that we discussed a lot. And I think it's really good example how we as a humanity we're dealing with the abstractions, because you think about euros and it might be in different forms. So right now it's possible to hold 100 euros in 5 different forms. And the first one, which is pretty common, it's in a cash. So basically in your wallet, you might have the banknote, which is 100 euros, and you can buy something in a shop or whatever, used for the services. It's quite typical. And we see that for the last 15 years, it shifted a lot because all other forms, they physically non-existing. There's some kind of form of electronic communications and programming or APIs communication. And I think that's one of the reasons why today we would like to go and explore what is the difference with the central bank digital currency from other forms. Maybe not a lot of our listeners understand the difference, but when you're checking the balance with your banking application, I would say there are 2 different forms depending on bank license or the institution that is holding your balance. Because if you open in Barclays application and you see 100 euros or from some European bank, retail bank, basically the license is regulating and guide railing how the bank is holding your physical cash, because it might not be baked one-to-one to your balance, because on the balance you might see 100 euro. It's a virtual balance because bank might have the physical cash, which is in gold or in any other assets, baked not one-to-one, maybe 1-10 or something. So it's another form. And then the third form, I would say that seeing the balance on your neobank, which is not retail bank, but licensed as electronic money institution or payment institution. And I think the disruption here that I have, a lot of people and the license saying electronic money institution, but that actually has nothing to do with the electronic money because it's kind of the same as a retail bank, but regulators, they're forcing those institutions to make money one-to-one. So if I would say the difference between those 3, having the cash or having the money with the not a bank is usually one-to-one because the interchangeable rate is one-to-one, but with the retail is different. But then we have 2 other forms, which I think they're quite new, and one of them is stablecoin, because the stablecoins, they're not issued by the banks. They're not regulated as in the physical cash. You cannot have the stable coins as a coins, despite of the name. So one another misguided name. It's basically electronic form which exists in blockchain. And sometimes the stable coins are minted by organizations which are well known or less known, but an ability to hold the euro into the blockchain network as a smart contract or any other form is also possible. The final type that we would like to dive deep today is the central bank digital currency euro. And technically, it's really different from cash and especially from the electronic numbers or the balances that you see in your retail or neobank, because it's a special type of the infrastructure and special type how the regulator is guide railing and providing the legislation for this new type of the 100 euros. So it's pretty astonishing that today you have 5 different forms how you can present 100 euro.
Well, as a joke, we have 3 forms of a euro. The ones you have in your pocket physically. Second one is those that you have in your credit card or debit card. And third one, those you have in your bank account. CBDC, a lot of people are, even in our industry, they don't understand till the end what's the difference between those euro you will see now in your statement in your bank account, CBDC that you'll see in your kind of a wallet. In both cases, it's just the same numbers. What is the difference between this is just the way how the technology works. another side joke, like I heard some months ago, if all the stable coins, bitcoins are stored in blockchain and working in blockchain, where this blockchain is located. Anyways, this is a way how to decentralize, centralize at the same time, to be honest, the cash flow, the money issuing, and so on. It's not just a trend; it's our future, and we have to be prepared for this. Currently, there are only 5 countries that are launched full-scale CBDC. Well, technically, the 5th country is China. And technically, it's a pilot, still they're in pilot, but they have the biggest part of transactions from all those 5 countries. So those 5 countries are Nigeria, are Jamaica, China is already mentioned, and Bahamas. Chinese CBDC, or electronic yuan, how sometimes you can read it in the mass media and newspapers, prove the fact that it's a workable, in a very well-established environment, controlled environment. This theory can be applied into practice. All the 5 countries, they already prove the fact that it can go on retail easily. You just have to adapt the policies, regulations. But besides China, those countries, for them, it was much simpler to do this. Nigeria basically did this for, boosting their economies. Also, the CBDCs, they also have 2 sides. They had the side of retail and wholesale. And there's this so-called wholesale CBDC. Wholesale CBDC is the equivalent of interbanking communication between a central bank and other commercial banks regarding settlements and so on. Retail CBDC is those we will see in our wallets, in our accounts, wherever, call it as you want. We as individuals and we as a business will use in future. And the retail wholesale CBDC are 2 separate streams. Even they are using the same technology. Retail one needs a lot of regulations, like classical cash flow, electronic cash or physical cash flow in the country or on the continent in case of Europe. It requires a lot of regulations. It requires to make the electronic money institutions, payment institutions, banks, to make a very heavy compliance, KYC, and so on, where the wholesale CBDC will be easier implemented. And I think the implementation of this will be faster. It will be the first thing we will see. By the way, Switzerland already did this testing environment. And I think the first step of CBDC will be here in the wholesale, where commercial banks will start to communicate with the central bank.
I think one level that I personally would like to put into the difference between different types of the currencies or digital presentation of the currencies is the centralization and decentralization, because a lot of people potentially mixing up the stable coins with the digital currencies. And I think the difference is that with the digital currencies, they usually led by the central banks, which means it's a new form of the money. At least we had really nice discussion with the Rainer Alt about the digital euro. The intention is to have the advantages of the cash, because when you hold in your physical euro, you're kind of the custody for your money, because where they're located in your pocket, into the wallet, you're basically accountable for keeping it safe. And with the electronic money, or even with the retail banks where you are dealing with your balances, bank is accountable and custody for your money. And central bank digital currencies, they trying to develop the hybrid model. When the currency is issued by the central bank, it's safeguarded, it's regulated by specific legislation, but you might be the custody for those parties. So you will be able to hold them in offline mode. You will be able to transact in offline mode. You will be able to hold them online and also transact online. So I think this categorization will help us to understand what is the nature of those digital things, because they don't have physical presentation. So basically, stable coins, they're working on the blockchains, and usually they build on decentralized approach. So the part of the network can push an update and say that the funds has been moved from point A to B. It's signed and accepted by the network, where the rules for the central bank digital currencies, they are issued by the central bank, but they can be even done offline without the chain and blockchain. So it's basically centralized in terms of the rails, in terms of the ways how the funds are moving. I think that's important note here.
Speaking about the European Union, you already mentioned. European Union is making big steps towards implementation of CBDC. The European Central Bank already has a lot of policies in place. There are consortiums created. We spoke about these consortiums in some of our weekly harvest reviews. And or at least to be ready in 2029, 2030, if the legal framework will be ready this year in 2026. Seems like European Union took this very, very seriously. mostly because of competition between CBDC and stablecoins, mostly because this topic became a very geopolitical one. The United States decided, with current administration, they decided to move towards the using of stablecoins linked to United States dollar, and they made it a huge geopolitical thing. Europeans understood that it's quite risky for financial sovereign, and they just decided to move towards electronic euro or European CBDC. And it's very interesting that Europeans are taking this topic very seriously. They have decided that they want to make it, to give a trust to population to use them, this kind of instrument, this kind of a payment method. A lot of people are afraid that your financial transaction will not be anymore just kept only for you. And there will be no anonymization because basically you will not have any kind of a cash, and there will be a traceability of the funds, what's coming, what's going out. And for example, the regulator will be able to see how 1 euro is circulating through the entire economy. By the way, like now, currently, you can track one stablecoin or one Bitcoin or wherever you can track via the wallets. Europeans decided that they put GDPR in the cornerstone of this project also. So for retail side of CBDC implementation in Europe, we will not have anonymization, but we will have pseudonymization. Basically, it means that only the PSPs, only the banks, only the payment institutions will know after KYC, will know that you are specifically the one who is spending that specific euro. When the central bank will have no clue about this, they will just see some kind of ID or pseudonym or whatever. And also, Europeans decided that they want to do implementation, they want to do incrementally. So first, they decided, and because of this, by the way, they invited a lot of PSPs and AMIs to join the working group and for the implementation of this thing. In the first implementation side will be that me as a user, we are onboarded in a PSP in a bank, as already mentioned, and nobody will see what's happening, who is behind those wallets. The second tier of implementation will be that PSP will send, via settlements, via like basically using the same models existing today, they will send in real time pseudonymized identifiers markers, and ECB will not be able to track if it's John or Juan or Carl did a transaction in one country or another. But to be very honest, because we are tracking this topic into our weekly harvest review, I have big expectations from this CBDC implementation, and I'll be very happy when I will see that we here in Europe, doesn't matter European Union or not, but in the continental Europe, we'll have such kind of CBDC.
I think the important note here that the testing for the digital euro is starting in the second half of 2026. And the idea is test in real environments, like paying in a shop, making the payments. I was thinking, Dima, about that it potentially creates the threat to card networks. Because if the European Union and Central Bank of Europe will find a really nice and elegant way how to include in the payment network a new instrument, which is safe, which is secure, which is protecting the customer, and will work as a real time, it potentially creates a huge opportunity to evolve with the settlement times and reduce the cost for the merchants. Because instead of going into the networks and paying the percentage of the transaction, it creates the possibility to kind of reboot almost completely from the scratch the payment infrastructure for Europe.
One of the advantages of a wholesale CBDC implementation is minimization of settlement period between the central bank and the commercial banks. So, for example, in Switzerland, there is a project, if I remember correctly, the name is Helvetica. In a very closed environment, of course, they did some of the testing, and the settlements were instant, not T+2, T+1, instant settlements, which gives you a lot of boost for your business as a bank. Second thing is, if you will be as an acquirer for some e-commerce platforms or e-commerce customers, merchants, you as a AMI or a bank, the entire payment architecture will be built around not the card schemes, Visa, Mastercard, but around European Central Bank rules and policies. And you will not be in a situation to adapt, to be compliant with BRAM rules, with Visa rules, with European Central Bank rules. You'll just have only one thing. And I think this is a very, very interesting topic because already in European Union, we see how people or companies were trying to avoid card schemes. Revolut in collaboration with some airlines where you can just pay via Revolut Pay inside of a plane during the flight for, purchasing a snack. Everything is happening inside of Europe, doesn't go anywhere. SEPA experiment. SEPA just proved that European Union is able to do such kind of experiments and things. And to be honest, I think implementation of European CBDC will be with a bigger success and much higher impact than SEPA had in the period. But even SEPA, currently all the transactions inside the European continent, not European Union, but European continent, Ukraine, Moldova, Balkan countries that are not part of European Union, they're also part of the SEPA. So we're not using SWIFT. And it gives us a lot of freedom. And I heard someone, very smart person, said several weeks ago to me that the Visa and Mastercard business in Europe will change significantly in next few years.
And I would like to recommend the Atlantic Council page for a CBDC tracker, because then you can, in really nice way, you can learn the current status of different projects for a CBDC in the world. I would like maybe to stop here and kind of compare, because in our episodes and news, we are discussing a lot the innovations happening in the United Kingdom. And I was pretty astonished to kind of update myself with the recent status of the digital pound. And in this case, Central Bank or Bank of England, they actually acknowledging that the reason for the Bank of England to take a look into digital pound is to understand that the way people are paying is changing. They're saying that we're not using cash as much as we used to, and digital payments are becoming more common. But the outcome is that they didn't make a decision if they're going to introduce the digital pound. So I would say there is a potential for European Union to lead with innovations and kind of showcase and show proof how it potentially is working, and with a large scale, because implementing it and adapting the regulations and then adapting the infrastructure for a lot of countries simultaneously will showcase that it actually has a great meaning and great impact for the payment industry.
We kept this topic for the end of our today's podcast, is how the CBDC will work in offline mode. I think it's a very interesting topic, and currently exist different scenarios how it will work. Possibly it will work like similar with the logic of card to card, physical card to a physical device, approaching, inserting, using the chip on the card. Possibly it will be device to device. Still today, the question of how to use it offline is not yet solved. We don't have a clear understanding, a clear solution for this. And I think this will be one of the next things European Central Bank will think about. Of course, exist decentralized internet networks or decentralized networks where we can be able to use it device via device, use it for making transfers. And by the way, this will be, if such kind of a technology will be used, it can be proved the fact that pseudonymity and GDPR will be really, really applied, because not everyone believes in the fact that anonymity will, even with pseudonymity, everything will be visible, everything will be traceable. And exist a lot of critics who said, like, the period where I will be able to use the cash I have as much as I want, as anywhere I want, will be finished. But so possibly this is true, but depends if, for example, there will be solutions via offline usage in offline regime of a CBDC. It possibly will help people to start to believe in this. And also, all the time exists the risk that anti-money laundering rules, compliances can be rewritten, and everybody can, just your country, your state, your central bank can change the legislation in a way that you'll just woke up in the morning and you understand that, the government is tracing you totally. You're not anonymous anymore. And this is the last thing. And by the way, I think the hardest thing that European Central Bank or other countries that will implement CBDCs will have to explain to their customers, will have to explain to their population. I know that those countries who already implemented this, like Nigeria, Bahamas, Jamaica, they did quite a big amount of work into this field, but they understood that people are not yet believing them. So this is why they moved towards wholesale CBDC. China, because of a different government type, they did it like without too many explanations. And to be very honest, they already have, all the payments, the majority part of the payments are made via some social media platforms inside of China. And I mean, they don't even have such kind of questions because they don't have anonymity already in place?
I think with the offline payments and traceability, that's really good questions. And from engineering standpoint, usually the inputs are coming from business. So one of the things that definitely is there is limitation how much you can transact offline. After that, basically everything becomes really simple in terms of the tech, because it's going to be device to device payment, and I assume it's going to be with the cryptographic signing. We all had those examples during the COVID, because it's a good reminder how the vaccination has been checked during the COVID. You didn't have to have the connection to present the QR code. And actually, the device which we're checking also shouldn't be connected to the internet, because the QR code, that's your signature. And then the signature is checked against the existing database of the key. So I think something similar will happen. The transaction between two devices will kind of hold the signature and pre-sign it like a tokens, which can be checked on other device and accepted. And then when those of two devices will come online, they will be synchronizing with the main storage, and it's still centralized storage for those transactions. I think the biggest issue to prevent the double spec pending in offline, because you can send the token to one device to another one. So some kind of legislation or business input will guardrail how those operations will be happening. Are they marked with the timelines? Are they marked with some priority? Maybe even with the trustable level, because if a specific device is compromised, then the trust level is lower, and those transactions which not be settled in those favorites. So I think that's technical, sometimes question. They're easy to resolve if we have a proper business inputs. And the whole idea from the central banks to not rush into the implementation of stable coins, not to rush into the adopting those new technologies, but have a time, go through the really good thinking process and business process, put robust legislation which will allow to transact and feel safe for all the stakeholders, being PSP, being the customer. And I think it puts really good cornerstone into the development of the digital payments. Because let's be fair, whatever we have right now in the online payments or even on offline payments with devices, it feels like the old bones in the new skin. And basically the same old dinosaurs are still going through the streets. But we need to update and make sure that we are not using the technology from 50 years ago, when we are just using the cards introduced by Dinners Club, et cetera, but we are really in advantage and utilizing all the power and all the technical capabilities and business capabilities in modern payments. So I'm really looking forward to have those new digital euro or other digital currencies to be available, and the decision from central bank to allow us to test and at least play with them and see what are the advantages in real world compared to academic knowledge.
Example of Dinners Club in the first years of existence of credit cards. The same path CBDC are now passing through. It's identical thing. Those time people also have these questions like how it will work offline, how the communication will be. Remember that in that period there was no internet, there was no fax even. Things were lightly setting. It was they were slower, but they solved this. And I think the same thing, the same path, grosso modo, the same path would be with CBDCs. And yeah, the single question, I think we can leave it rhetorically here, is what will happen with our CBDCs, with our digital euro or wherever, when the electricity will be turned off for the entire country because of something will happen. This is a very interesting question. But again, I think crypto showed exist offline possibilities to use or to keep offline wallets decentralized that you can keep and use it. But again, I still don't have a vision and understanding how it will work in case of for example, in your city, for one day, electricity is disappearing, and how you'll deal with this.
Thank you for watching us today. I think it was really interesting, deep episode discussing the status of the different digital currencies, including central bank digital currency. Please comment, please like this and share episode, and we're looking forward to see you on other episodes.